Bitcoin is trading over $100,000, yet the mood in crypto has never been worse. The fear and greed index is screaming extreme fear, online forums are filled with disillusionment, and crypto-related Google searches are at multi-year lows. This cycle has been demoralizing for almost everyone. So today we're asking, why does this bull market feel like a bear market? What has fundamentally changed since 2021? And most importantly, is this despair a warning sign or the greatest contrarian signal in crypto history? My name is Guy, and you're watching The Coin Bureau. First up though, I'm not a financial advisor and nothing in this video is financial advice. This is educational content meant to inform you about why crypto currently feels like a party happening in purgatory that all your exes have shown up to. If crypto also has you questioning your sanity, then smash that like button and let's get going.
Let's get going.
So, if you've been in crypto for more than a few years, you know the feeling. The explosive, face-melting rallies, the parabolic charts that go vertical, the retail FOMO that drives your friends and family to ask you about Ripple coin and that one that's a dog. Except this time, none of that is happening. Instead, we've had a slow, grinding and exhausting climb, punctuated by brutal corrections that shake out even the strongest hands. This cycle has broken all the old rules. For the first time in history, Bitcoin smashed its previous all-time high before the halving, hitting $73,000 back in March 2024. That event alone should have told us that the game had changed, and the reason it feels so different is largely because the players too have changed. The retail-driven mania that defined previous cycles is almost completely absent. The Coinbase app, once a fixture in the top 10 of the App Store during bull runs, has fallen to 29th in the finance category. The retail army has gone home, and in their place a new, silent and far more powerful force has arrived: the institutions. This has created a two-faced market, defined by a massive divergence between retail fear and institutional greed. On the surface, sentiment is in the gutter. As of late October 2025, the crypto fear and greed index sits at 24. That's a level of extreme fear we typically see at the bottom of a bear market, not when BTC is trading over $100,000. It's been stuck in fear for weeks, reflecting the exhaustion and anxiety of the average crypto investor. But beneath this surface of despair, a different story is unfolding. While retail traders are panicking, institutions are buying Bitcoin like it's a Black Friday sale. In just the third quarter of 2025, spot Bitcoin ETFs saw $7.8 billion in fresh capital. On a single day in October, they recorded a staggering $1.2 billion in net inflows. BlackRock's IBIT ETF is on track to hit $100 billion in assets under management in just 435 days. For comparison, the next fastest ETF to reach that milestone took over 2,000 days. So this isn't just adoption, it's a hostile takeover of the supply. Now, I should add that data suggests a significant number of spot ETF buyers are actually retail. In other words, the sort of people we would expect in previous cycles to open a Coinbase account and start there. Having seen all the other assets available, many would then have decided to dabble in altcoins as well, seeking a higher return than what they might expect from BTC. Instead, it seems like they're buying ETF shares and leaving it at that for their crypto exposure. So, on one hand, we have institutions hoovering up BTC via ETFs and treasury companies, while on the other, we have many retail buyers also choosing to go this route, but then venturing no further into the broader crypto ecosystem. But it's not just ETFs. On-chain data shows that while prices have been sliding, wallets holding between 1 and 1,000 BTC have been in strong net accumulation. A recent Coinbase survey found that 67% of institutional investors are bullish on Bitcoin through 2026. So we have this bizarre paradox. The people who historically drove the market are largely absent or getting their exposure via ETFs, while TradFi titans are quietly and systematically buying everything they can. So, what do they know that the average investor doesn't? Well, part of the answer lies in the macro environment, which is a minefield of both terrifying new risks and incredibly powerful tailwinds. The biggest negative catalyst and the primary reason for the recent fear is the escalating trade war. In early October, President Trump's threat to impose a 100% tariff on Chinese goods triggered the single largest liquidation event in crypto history. Over $19 billion in leverage positions were wiped out in hours. The crypto market lost $400 billion in value. This event proved that crypto is no longer an isolated asset class, but deeply intertwined with geopolitics and macroeconomics. This is a new and unpredictable risk that simply didn't exist in 2017 or 2021, and it's a major reason why sentiment is so fragile. But for every macro headwind, there is an equally powerful tailwind. And the biggest one is coming from the Federal Reserve. The Fed is now in a monetary easing cycle. They cut rates back in September and are expected to deliver at least 2 more cuts by the end of 2025. Historically, Fed rate cuts have been rocket fuel for risk assets like Bitcoin. Lower rates weaken the dollar and increase liquidity in the financial system, pushing investors towards assets with higher potential returns. One analyst put it perfectly, quote, "It was never about a 4-year cycle. It was about liquidity." And right now, the Fed is turning the liquidity taps back on. Now, this brings us to another big change since the last cycle and the most powerful reason for long-term optimism: the regulatory revolution. For years, the crypto industry has operated under a cloud of regulatory uncertainty, with the SEC playing the role of an aggressive, unpredictable enforcer. That era is decisively over. Since the start of 2025, the SEC has undergone a radical transformation. It's dismissed its high-profile enforcement action against Coinbase. It has paused its case against Binance. It has closed investigations into OpenSea and Robinhood. It's formed a new crypto task force led by the famously pro-crypto commissioner Hester Peirce, with the explicit goal of creating a clear regulatory framework. And it has a new pro-crypto chair in the form of Paul Atkins. The contrast with the SEC of just a year ago is crazy. But the biggest regulatory breakthrough came in July 2025. After years of debate and gridlock, Congress passed and President Trump signed into law the Genius Act. Now, this is not a proposal, it's the law of the land. It establishes the first ever federal regulatory regime for stablecoins, providing concrete rules for a $250 billion industry and legitimizing it within the US financial system. This regulatory clarity is the green light that institutions have been waiting for a decade. It removes the single biggest risk that has held back trillions of dollars of capital from entering the space. Now, we've talked about spot ETFs, geopolitics, and the regulatory landscape, all of which have contributed to the current sense of disillusionment, either directly or indirectly. But the main reason why everyone is so demoralized can be summed up in one word: altcoins. In previous cycles, Bitcoin would go crazy, then capital would begin to rotate out of BTC and into smaller cryptocurrencies. Some of these were genuinely interesting and innovative projects seeking to build on the technology Bitcoin brought to the fore. Others were mere vaporware or outright scams. It didn't matter though. Almost everything caught a bid because speculation was the name of the game, interest rates were low, and although by 2021 there were thousands of altcoins, there was enough retail capital to send almost any old ticker to the moon.
The situation has changed.
Spot ETFs have kept many retail traders at arm's length from the altcoin market. The number of altcoins in existence has gone from thousands to millions. Meanwhile, crypto's reputation has failed to recover from the disasters of Terra and FTX in 2022, with many now viewing the industry as an outright scam. And, to be honest, who can blame them? Much of crypto is still absolute bullshit, and scams and rug pulls are more prevalent than ever. The Trump administration, while staying true to its promise to be a friend to the industry, has also reinforced the idea in many people's minds that crypto is one big grift. The night before Trump's inauguration, the Trump and Melania meme coins dropped, making the insiders behind them a fortune. Not long after, the president of Argentina was caught up in another meme coin scandal, which again saw well-connected insiders make bank at everyone else's expense. New crypto projects are popping up all the time, some well-intentioned, some not. We see massive insider-driven pumps propel these projects to insane valuations, only for them to collapse as those insiders begin selling. All the while, ghost chains with little in the way of development but massive, deranged communities continue to silo capital away from where it might actually do some good. Even useful and well-adopted projects have in many cases huge numbers of tokens regularly hitting the market as VC allocations get unlocked and sold. And it's now possible for any shit-for-brains basement-dwelling cretin armed only with a vape and a bottle of Adderall to spin up their own useless token in less time than it takes to type GM into a Discord chat to farm airdrop points. Meanwhile, many so-called KOLs continue to honk nonsense into the timeline, in many cases shilling tokens they just so happen to have huge undisclosed bags of. In short, everyone knows who's doing well this cycle: exchanges, insiders, and grifters. They did well last time too, but there was still something left over for everyone else. This time, the drawbridge has been pulled up and the guys inside the castle occasionally tip a bucket of scraps over the wall for the rest of us to fight over in the mud. No wonder people have turned to using perps to try and make silly money like they did last time around. Crypto has become deeply cynical because it became too good at making unscrupulous people a lot of money. New people have been put off from entering as a result, even though the pace of development in the industry has been incredible. And this is another paradox facing us right now. We have a lot of useful, well-built and well-functioning products built by incredibly smart, good people. But they're being crowded out by an army of zombies, scams, and vehicles for relieving people of their money. We can't see the wood for the big steaming pile of crap. So, where does this leave us? And when will things start to feel better? In short, this cycle feels demoralizing because the old game is over, yet in some ways it's still playing out. The retail-driven, parabolic, get-rich-quick casino of 2017 and 2021 is gone. In its place is a slower, more mature and infinitely more powerful market driven by institutional capital and macroeconomic forces. And still a load of value extraction to boot. The fear is justified. New risks like geopolitical trade wars can and will cause massive volatility. But the underlying foundation of crypto has never, ever been stronger. We have record-breaking institutional inflows that are creating a massive supply shock for BTC. We have the beginnings of a new liquidity cycle from the Federal Reserve. For the first time in history, we have clear, supportive regulation from the United States government. And we actually have usable products slowly gaining adoption. So, what could finally improve sentiment?
You tell me.
Well, a de-escalation in the trade war would remove the biggest macro overhang. And continued progress towards a better, more well-regulated industry would help too. The SEC's upcoming innovation exemption could also go a long way towards encouraging development and deployment of useful products in the US and elsewhere. A new all-time high for BTC would remind everyone that we're not in Goblin Town just yet. But if we really want to see crypto sentiment improve, we need altcoins to start showing strength again. And in order for that to happen, we ultimately need a big old cleanse to rinse out all the crap that's clogging up the market. Now, that will come eventually, and while it won't be pleasant, it'll be the medicine we need. So, this isn't the end of the cycle. It's the painful, frustrating, and confusing transition from crypto's adolescence to its adulthood. All right, so what do you think? Too harsh or fair criticism? Are you feeling the disillusionment of this cycle, or are you quietly accumulating like the institutions? Let me know your take down in the comments, and if you want to understand more about how the new US crypto laws are changing the game, you can watch our deep dive on the Genius Act right over here. As always, thank you for watching, and I'll see you again very soon. This is Guy, over and out.